By our calculations, the combination of the decline in interest rates and the effects of inflation have actually cost cash savers in the UK £326 billion over the last 5 years. It's quite a phenomenal transfer of wealth. Essentially, the people who've been prudent giving up their savings to help those who are borrowing and perhaps even have been financially irresponsible.
Where does that figure come from? It's a pretty huge figure, a significant figure, but it's very difficult to calculate.
Well, we're simply taking the prevailing interest rate before rates started coming down. There's £1.1 trillion of cash savings. That hasn't budged very much in the last 5 years. We're using that, and we're simply using the government's own figure for inflation. It's a relatively simple calculation to make, but of course, if it had been done through tax, there'd be massive protests. You know, it's 5 years since rates came down, but it's 1 year since there was only going to be a 6.5% confiscation in Cyprus. This is a much, much bigger transfer of wealth, and yet savers really are being ignored by politicians and by the government.
So what would the alternative be in your view?
We need to actually start encouraging savings again. It's quite appalling that they're being discouraged. It's going to cause all sorts of problems further down the line. So no, interest rates need to start moving now. The economy is getting a little better. They need to go up gradually rather than have to be jerked up if the Bank of England leaves it too long.